Hello and welcome. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. The market recovers from the day's low, even as the Nifty fights to hold the 10,100 mark. Pharma stocks buck the trend. Moving in line with Asian peers, the rupee falls to a 10-week low after the Fed signals more rate hikes by the end of the year. Dr. Reddy's is the top gainer on the Nifty after brokerage upgrades and an EIR for its Srikakulam plant. Cyrus Mistry can pursue charges of oppression and mismanagement against Tata Sons at the National Company Law Tribunal, says the appellate tribunal in a partial victory for Mistry. And it's a weak listing for matrimony.com, falls as much as 8% from its issue price.
Those are the top headlines, but quite frankly, if you look at the market, I think the headline is the recovery that we're seeing in the markets today. Look at what the market did sometime around early morning. We slipped to the lowest point of the day, down about 0.5%. Since then, I think we've done remarkably well. We're not back in the green as yet, but hardly any losses. 10,121 above the 10,100 mark once again. And the broader markets too, I think, would be following the same pattern. So if you look at what the mid caps and the small caps have done, not an alarming fall, about 0.4% kind of a fall that has come in for the mid caps and the small caps as well. The market breadth will come up on your screen. We should also then get the heat map. So this is the market breadth. Just a bit of a convergence, if you will. Nothing too dramatic, but a bit of a convergence. But the advanced decline by itself is not looking all that terrible. Just show you what's happening around the index. Yes, red is dominating. And the top stock on the losing side is Z, yes. But if you just look at what some of the pharma names have done, I think you will see the picture on the heat map. The top 6 names are all exporters. So be it Dr. Reddy's, which is up 6.5, Cipla, Lupin, Sun Pharma, Tech Mahindra or TCS. The top 6 are all exporters, and which is actually a heartening sign. I just want to get in the contributors plate once before we talk about the broader end of the spectrum, which I'm sure Pradeep will speak about. But if you look at what the Nifty contributors have done, HDFC and then a slew of exporters, Reddy's, Sun Pharma, TCS, essentially bringing up the list of gainers. Negated what's happening to 2 or 3 heavyweights, including ICICI Bank and ITC. But all in all, the afternoon seems to be the one of recovery. I don't know if it's panning out in the same way on specific stocks, Pradeep.
Exactly, and also if you look at the sectors, top 4 gainers on Nifty today are all pharmaceutical stocks. And if you look at mid-caps, Ipca, Ajanta, Torrent Pharma, a few stocks buzzing today in trade with good volumes today. Also, you have some PSUs like ITDC. We discussed this stock yesterday also in our show. Stock is up 5% today as well. It seems at least one deal is kind of finalized out of 3 hotels that ITDC plans to sell or rather transfer to state governments. Tourism Finance Corporation, where IFCI is out to sell around 27%. That stock is also buzzing with good volume. And ITI, we'll talk in detail about ITI later in the show. We also have some small caps like TVS Electronics and Om Metals. This stock is buzzing since morning after that deal yesterday. Well, what is really down today? We saw maximum supply at financial services counters. If you look at it across the board, you could say banks like ICICI, you have NBFCs like Bajaj Finserv, IIFL, you also had Reliance Capital, where we saw a lot of selling, and it continues even till now. You can look at it. Our cap is down 3.5%. This is ahead of the Reliance Home Finance listing. And also some of the high beta names like HFCL, that continues to lose, is down by 5% today. JP Power is down 3.25%, and also CCD, well, the coffee day. This stock is not really a high beta counter, but today you can look at the kind of volume we have seen. Seems like there is a lot of liquidation at this counter as well in today's trade. Niraj?
Yep, thanks a lot for that, Pradeep. So those are some key stocks to watch out for. Let's get in our experts to talk about how are they approaching trade this afternoon. Let's start off with the conversation with Shrikant Chauhan. He joins us right now to talk about what's really happening on the index. More importantly, what are the specific stocks? Shrikant, thanks so much for joining in. An index strategy, if you have one currently, because it's an afternoon which is seeming like it's bouncing back. And then couple that up, of course, with your specific stock recommendations.
I think, see, Niraj, the way market today fallen from the high of almost 10,150, it opened higher, but it quickly dropped, and the fall was much sharper and sudden. So while looking at the overall formation of the market, I'm of the view that till the market is not crossing the level of 10,180, it is going to remain in a range. So it is better if we at this point of time take long positions with a stop loss at 10,100. Why? Because the overall broader market recovered very well from the panic low of 10,050, but at the same time we are expecting market to remain in a range. So it is better to keep as small as possible stop loss for the long trade, and 10,100 should be the final stop loss for today's trade.
What about specific stocks, Shrikant?
I think, see, if the market is again recovering back and it is above its important support area, then we should look for adding those stocks which are parallel to index. So in that context, we like Reliance Industries, which is around 835, 840, 842 kind of levels. So with the stop loss at 835, we should look for adding this stock to the trading portfolio. We also like a few pharma stocks, but in that space, Sun Pharma looks really good. It was around some 510, 515 kind of levels. Around 500 levels, the stock is having very good support. Today also, in fact, when the market was down, it was very close to those levels, and from there it recovered very well. So here I'm of the view that it is heading for 560, 565 in next couple of days, and stop loss is very nearby at 500. The other one which we like is from the PSU space, and there we have a view on Container Corporation, which is trading around some 1350, 1360 levels. There also we are of the view that the way the news flow is there, I think this one is going to perform much better than the expectations. So here also the risk reward ratio is quite favorable. With a stop loss at 1330, we should look for adding the stock to our trading portfolio, and we can keep a target of close to 1400.
You know what's interesting today, if you add the total traded value at Dr. Reddy's and Sun Pharma together, DV's has probably clocked a higher turnover today. So this is really interesting. DV's is the one which has been buzzing. It has moved up quite a bit if you look at last 1 week's chart, and it keeps moving up with such a volume. How would you really look at it, Shrikant?
I think the way the formation is there, and in last 3
Shrikant,
days.
can I just come in for a moment?
Yeah.
Sorry, just need to come in for a moment because ITI, the management is with us. Remember, the stock is on a tear. It's up about 20-odd%. It's gained more in the last 5 months and trading at all-time highs after it's emerged as the lowest bidder in a large defense contract, 7,000 crore defense contract. Joining us now is Mr. S. Gopu, if I'm not wrong, Chairman and Managing Director of ITI. Thank you so much, sir, for joining in. Tell us, congratulations for being L1 in this contract. It's a fairly large contract. Can you give us the details? What's the time span over which it will be spread over? And what would it do to your revenues immediately in FY18?
So, you know, this ITA has done already this contract ASCON, that is Army Strategic Communication Network Phase 1, 2 and 3. ITA has done it. Still, ITA is maintaining successfully all over the borders of our nation. And now this ASCON Phase 4 project has, we have bid it, and just now I also got the information that we are the L1 in that. It's around 6,900 crores. What of it? It will be both supply and inflation and also the AMC value. It may go up to 2 to 3 years for inflation commissioning, maybe another 2 to 3 years for warranty and AMC, if I'm not wrong. Maybe further details are accepted. And also we are already geared up for that. We will be having a separate verticals for this. And we are fully geared up, and our people are seeing forth to get further communication from our SQL defense so that we will start our work together. And already ITA has reduced its losses from 256 to 56 crores last financial year. And turnover has jumped from 650 to 1250 and 1250 to 1621 in the last 3 financial years. And this year we have a very good, turnover which we are expecting to cross to 2,000, maybe we will touch around 2,000 plus. And we will be able to post a profit on our own this year, even though last 2 years we are profitable with the government grants.
Right. Mr. Gopu, if you could just give us some rough figures, what kind of a contribution can we expect from a large order like this on your top line and your bottom line, and by when exactly will these numbers start reflecting in your financials?
Yeah, these numbers we will start reflecting in this last quarter, maybe the last 1 or 2 months we are expecting something to reflect. And the major things will start coming in 18, 19. Where we will be able to do 50% on our order value in that coming 2 financial years. And the contributions will be, I may not be able to tell you right now. Maybe it is a very good, comfortable portion which will be there.
Correct.
And we have civil work and electronic work and integration work and all that.
So given the size of this order, if you could tell us whether you would have entire capability to cater to this order in-house, or you will be looking for some kind of tie-ups, collaboration as well?
Of course, this is a very complicated and a very vast order, and we will be having our value contribution will be around 30 to 40%. We will be taking on board some expert companies also with the technology collaboration, and most of the manufacturing will be done in our plants. We have around 5 plants all over India, which is a state-of-the-art technology infrastructure. We will be able to manufacture within India, so that using this Make India concept also, Make in India.
Actually your value contribution probably. So your share in the order would be roughly 2,500 crore or so?
Maybe slightly more than that. We will be doing the system integration portion also in that.
Okay, so can you, okay, one final question from mine, Mr. Gopu. In FY, you mentioned the major part of the contribution from this order will come in next year. Can you roughly tell us what's the quantum, and will you break into the black or will you become profitable in the current year or in FY19?
Yeah, we will be breaking even this year itself.
Okay.
2017-18, because we have other orders also.
Sure. And what would this order do to your top line in FY19? Out of the 2,500, 3,000 crores of this order worth, how much will you book in FY19?
19.
Sorry, I think we lost Mr. Gopu. Nevertheless, I think we've gotten what we probably wanted. That's ITI. That's a large order, but I think important what Pradeep asked. The order size may be 7,000 crores, but I think ITI's share is probably close to 2,500 or 3,000 odd crores. It'll break into the black in the current year itself. Those are returns. Mehboob Irani Johnson with his thoughts as well. And Mehboob, thanks so much for taking the time out on inaugural episode. Before we get to the markets and specific large caps, pharma is active, but just ITI, you heard the management as well, if you could. I think they mentioned about the kind of returns that come in from orders such as these. The last 3 months, 6 months or 12 months, this stock has been on a bit of a tear. Now it's getting some large defense order as well. Do you track this one at all?
I think big question is why the stock was in a tear for so long. And having backed this order, the momentum according to me could take the stock up further 5, 10, 15, 20%. I won't say no. But I would say that people who have bought early could use this as an opportunity somewhere to book profit, because we need to understand that a 7,000 crore order, management themselves stating part of it will come in the last quarter, and that last quarter will push off to the next quarter, and 7,000 crores to translate in the P&L account. Will it happen in 18-19 also, or will it go into 19-20? What will be the bottom line? For a stock which has run up so much and its balance sheet doesn't convey anything positive as such, honestly, I would use this momentum, allow this momentum to cool off somewhere, and use the opportunity to possibly take money off the counter.
Okay. All right. That's the view coming in on ITI, which was our stock of the day, which is locked in upper circuit post that news of order win came about. But let's also welcome in Shrikant Chauhan of Kotak Securities. And also, also joining us is the independent expert, Mr. Srivastav here. Thank you, gentlemen. Good afternoon for joining us. Coming to you first. Well, the template of the market doesn't change at all. We've seen buying coming on every dip. Today itself, Nifty has recovered almost 50 points from its day's low. What's the call from the current level?
See, I think we are in a tight range. The bias remains upwards, but we are in a small tight range, and I would say 10,250, 10,280 on the Nifty is doable. Both the Sensex and the Bank Nifty have to confirm into these new highs that the Nifty has made, because both of the other indices are still not into new highs. So I would say that you would attempt with caution, but you would definitely be more long than short. And last time we were on the show, we were discussing that yes, you would want to be 60-65% long, and as a tactical short, you would want to carry 35-40% shorts in the book as well. So I would say the strategy would be mixed and would not be aggressively on the long side, and caution definitely is advised, because as I said, both the Bank Nifty and the Sensex are still to confirm to what the Nifty has done.
Okay, just before we move back to the fundamentals, Sarvinder, you want to give me your stock ideas for the day?
Yeah, absolutely. I think, as I said, I would stick to the large cap side of the trade, and I would say that I would like to avoid mid caps. I would also like to give levels again on the Nifty mid cap 100 free float. I think 19,200 is very, very critical. If we don't break out of that number, then we run a risk of correcting around 8 to 10% on the Nifty mid cap index, which means stocks individually could do more. So I would say that I would avoid the mid cap space till a clear breakout is there confirmed, and I would stick to the large cap space, and within that I will have 2 longs and 1 short as I mentioned as a strategy. The long side trades that I have, the first one will be from the private banking space, which is Axis Bank. I would say that 505, 510 was a hurdle earlier. Now in today's session we've been wanting to hold above those numbers, and the correction has taken support right from that 505 mark. So I would say I would want to buy Axis Bank for a month's time. This is a positional trade, so buy Axis Bank for a target of around 550 and keep a stop loss there at 489 on a closing basis is what I would recommend. The next trade that I have is again a slightly defensive name now, Coal India. Clearly wanting to base out over the last couple of months. 245, 250, a good support area now. The stock does not incrementally sell off from this range and has been holding that levels. So I would like to buy it for a target of around 280 on the upside. Keep a stop loss at 234 on a closing basis. Take a long trade there. And the solitary sell that I have today as a tactical short is Hindalco. From the time that I put the graphics, it's gone down. But I think a pullback towards 245 can be sold there for a target of 215. And keeping a stop loss there at 261.60 on a closing basis.
Well, Mehboob, one sector that is really buzzing for a few days now, we should say, is pharma. And just as we saw, not only the large caps, but also mid caps have been moving up in a relatively weak market today. What's your call here? Is it stock specific, or do you think the sector is probably now moving into the buy zone?
See, I've been consistently negative on the pharma pack, and I'm not changing my view. I've been stating when Sun Pharma was 1100 rupees, Lupin was maybe 1700, 1800 rupees. I used to say that these prices will become history. You will never see this price. Am I changing my view? Answer is no. But in the same breath, I think I wish to state that if there is an opportunity for a trade and making money on the long side, it is pharma. Same what PSU banks was say about a year ago. So you will distinctly see a possibility of some of these pharma stocks going up by 5, 10, 15, 20, 30, 40% from the recent close. Like DBs has already moved up by 30, 40%. You could see a Lupin doing next. You could see a Sun Pharma suddenly moving up 10, 20%. And you could see people with the same fallacy in the mind. It was 1100, now it's 550. How much more can it fall? Let's go and buy it. It's a great company, great stock. You need to understand the story is over. And the story is over because if you look at the molecule cycle, if you look at the graph is moving down, you have the regulatory problems which everybody is talking about. What about the pricing part? The pricing power is over. And it's not only in US, it's not only Europe, it's possibly in India also. So I would say the size at which these companies are, the growth is not going to come to justify the multiples. Now, are the negatives in the price? You can argue yes. And all the people who have been holding on to pharma are going to come and air their views and say, oh, it's a great defensive bet, 3, 4, 5 years ago. They are still saying the same thing. How much more can it fall? All the negatives are in the price. Is this the way you make money in the market? I would say pharma, if you want to make money, you should trade. But somewhere you should know that you should also take the profits out, because I believe, and I still say the same thing, the lows which you have seen are not the lows forever. Ultimately, the stocks will go even below those levels. So for the time being, I think if I was a trader, maybe buying for the next 1, 2, 3, 4, 6 months, maybe I would trade on the long side, make my money, but not get married to any pharma stocks, at least not the frontline names. So Dr. Reddy's would be having his own reason to go up. So you had asked me a question right now that is it individual stocks? I would say answer is yes and no. The entire pharma pack, the sympathy rally will come, under-owned sector, people have ultimately sold off. Anybody coming and buying, influence will take the price up. All those things will happen. But some stocks will have their own stories. But at the end of it all, if somebody says, I'm buying it because it's too attractive from the longer term angle, I would say go and take a walk. That is not the way one should be looking at pharma stocks, definitely not from the long term.
So Mehboob, let's spread good news. It's the inaugural day of BloombergQuint. Let's talk about something that people can invest in. If they can't invest in pharma, where can they invest in?
First of all, my congratulations to the entire team.
Thank you.
Good luck to you all.
Thank you.
I still believe that in this market, you need to buy into stocks which are going to show growth in the days ahead. The numbers which you have seen, market has understood it. Now go and buy companies which are going to show growth. If you ask me from sectors angle, I still believe financials is a sector which is possibly under pressure today, which possibly could be a little bit expensive in terms of valuation. I think that is the space to be in.
Clearly you like Edelweiss and Bajaj Finance out here.
Yeah.
So you don't like cheap names?
No, there are a whole lot of names I like. But if you ask me for the pecking order, it's going to be a tough call. But I still put Edelweiss at number 1. I would put Bajaj Finance at number 2. I would put capital first, despite a little bit risk in the business model here and there. But because there's a little bit of risk, I think you can see a fancy price for this stock coming. I would say a safer bet for a conservative investor would be L&T Finance. There's a whole lot of names if you ask me. Private sector banks, I continue to believe is a core holding, only 3 of them. Kotak, IndusInd Bank and HDFC Bank, which I will buy, get married, and I already got married to them. So I would not look at them. PSU Bank, somewhere, I think the time has come to take profits off if you were a trader. But this entire space, according to me, action should continue. There are proxy names for insurance, for finance, like Bajaj Finserv also. So those type of stocks, I think, could continue to attract buying.
You don't see any bubble in the NBFC space at current valuations too. You will recommend investors to go and buy these counters?
Now, what do you mean exactly by NBFC? Basically, if you are saying that Edelweiss is an NBFC, answer is no.
I'm not talking about Edelweiss. The other NBFCs for the likes of Bajaj Finserv, Bajaj Finance, which have rallied a lot this year.
No, I would say the better managed companies, I don't think there is a bubble. But if you feel that the stocks can come down by 5-10% and you are justified in calling it a bubble, I would beg to differ, because they can fall by 5-10-15% also from the present prices.
Right.
But they are certainly going to be higher over the next 1 year, and much, much, much higher according to me. The valuations, yeah, you can complain right now. Like Edelweiss, I'm saying 120 rupees has become a 280 rupees. Can it become 240 again? It can. But I see this stock at maybe 350 to 500 rupees over the next 12 months. It was simple capital market player. Today the company is into lending, is into insurance. Insurance, the losses should peak out in the next 2 quarters. The most important is in stressed assets. And it's number 1 player in the country. So it's very difficult. And with this IPOs, the way they're getting oversubscribed, companies like Edelweiss should be minting money and counting money. So I think everything is going in favor of Edelweiss right now. Coming to your Bajaj Finance, I think expensive. Yes, it is expensive. 45 rupees earnings in the current year should become even a 70 rupees EPS next year. Look at the growth. The management has proven itself, execution ability, a whole lot of triggers, and the business model is superb. So this type of names, if that is what NBFCs mean for you, I would say yes, there is money yet to be made in NBFCs.
Okay, and let's move forward. Nikki Mirchandani joins us now to take us through the Fab 4 stocks of the day. Nikki.
Hi, we're going to start off with the pharmaceutical counter because that's the sectoral which is in sweet spot today. The first one we're going to be talking about is the Orchid Pharma. Now, the stock has hit an upper circuit of nearly 20% and it's currently trading at its month high level after the API plant has got an US FDA EIR. The second one that would be talking about will be Dr. Reddy, another pharmaceutical counter there. The stock has nearly surged today 7.57%, which is its highest level nearly in 2 months. Now, this is after the formulation plant has got cleared by US FDA. The third one is an NBCC. Now, the stock has gained nearly 3.8% and the company today has received an order of worth around 3,200 crore from Department of Customs and Excise Government of India. The fourth one, surprisingly, is Reliance Communication. Now, the stock has snapped 6-day losing streak and has gained as much as 7.5% today. This is despite the fact that Ericsson India has filed an insolvency case against the company.
All right, Nikki, thanks a lot for bringing us the Fab 4 stocks of the day. Well, before we move ahead, just to address the market, Sensex has turned green and Nifty's almost recovered all its losses today. It's back above the 10,100 mark. In fact, Nifty currently trades at 10,134. And remember, today is the Bank Nifty weekly options expiry. We have seen recovery for Bank Nifty, but not as much as we've seen for Nifty as well as Sensex. Let's move on and talk about Dr. Reddy's then. Morgan Stanley has upgraded Dr. Reddy's to overweight with a price target of almost 3,133 rupees. Darshan Mehta is here to tell us about the rationale behind this move. Hi, Darshan.
Hi, Navneet. Clearly, the Morgan Stanley note working well for Dr. Reddy's, and apart from that, there were 2 plants which were cleared by the US FDA, so that added to Dr. Reddy's. But what is Dr. Reddy saying? They're saying that the risks are known at this point of time and well discounted at this point of time, and that is why they believe that there is a potential for the counter to go even higher. So the target price that they have given is 3133. They're saying that now, looking ahead, there are 3 to 4 drugs in the pipeline which could be blockbuster, and they will actually lead the earnings for Dr. Reddy. So drugs like Suboxone, Aloxi, Copaxone, all these are high margin drugs that if they will be launched will lead to significant amount of earnings recovery that will come in. Interestingly, they've given a bull case and a bear case scenario. The bull case scenario which Dr. Reddy talks about is a target price of 35.91, which gives the potential of another 50% upside from this point of time. And the bear case scenario that they've talked about is 18.49, which means the potential low of 20%. The base case is close to almost 40%. So the risk reward, according to Morgan Stanley, is on the bullish side currently.
Thanks a lot for that, Darshan. So that's essentially the key reason why Dr. Reddy's is doing what it is doing in the session today. But it's not just about pharma, quite frankly. Look at a bunch of other names. Before we hit that break, Delta Corp is up about 5.5, 207. Coincidentally, we have Meher Bunirani in the studio. Bombay Dyeing is up about 5% as well, 212, and really good going for that one. And I must say, the future group stocks continue to rise and shine. So in today's session, future retail edges up another 2.5%. Really good going. Merbun, before we take that break, and Shrikant, I would want you to comment on Delta Corp as well. But Merbun, to you, Bombay Dyeing. I mean, what's happening here? I'm flummoxed with the move over the last 3 months, 6 months, 9 months. This one has been on a tear. The returns are northwards of 300%, if I'm not wrong, for the year. What's happening here?
Honestly, don't track it much. I've given up on it. And as always, there are certain groups, certain companies, just keep your eyes closed and don't bother as to how they move. But yes, I'm aware of the fact that there is too much of buying frenzy, and it could be related ultimately to something called unlocking of real estate value. I don't know how much of that will ultimately come to shareholders, but this is a story which I've been hearing for the last 10, 15 years now. So I honestly won't care too much for a Bombay Dyeing. I would allow it to go. Momentum is there in the stock and it can go up a little bit higher. I really wouldn't know much about it.
You want to talk about Delta, Merbun?
Delta has been a stock which I have classified as a core stock in my portfolio with clear disclosures in place that I continue to like the story. The point is this the stock which will go up higher? My answer would be yes. The fact is it's ultimately the only company in the gaming segment. And there could be a whole lot of triggers coming for this stock in the days ahead. If I try to justify the valuation, the only one way I can justify is that I believe that this company is never going to see a slowdown as far as top line goes. It will keep on growing. And if you have the online business getting added, tomorrow if Sikkim starts, tomorrow if you get the license for the casino at Daman, we really don't know. All this type of things could really make the stock go up. Let's understand one thing, it's a favorite of the market, man. And we just need some triggers. And as far as the capital cost goes, a large part of it the company is already incurred, which is not going to hurt the balance sheet further if it goes into other areas also. So I continue to like Delta. The question is, again, at 207, can I justify it was just 185 the other day? That's a very difficult question. Can the stock be a 300 rupee stock in the next 12 to 18 months? I would say, I would like to believe it will happen.
Shrikant, you would like to trade this stock, Delta, and also I think you have a view on ITI.
Definitely, like the way Delta recovered from lows and the way the stock has spent a lot of time below the level of 195. In fact, the stock was below this level since last almost 10 months, and now the stock is like sustaining well above this mark. So based on its overall formation, I'm of the view that it is heading for the levels of minimum 250 and maximum even we will see the levels of 295 or 300 on the higher side in next couple of months. But because it's a concept story and because a lot of traders as well as short-term investors, they are ready to trade as well as to take positional trades in all mid-cap stocks, I think this looks excellent to buy at these levels with the stop loss at close to 190 on the downside.
Well, the other space which is buzzing today are the hotel stocks. Well, Pradeep at the start of the show already spoke about ITDC, a counter which went up yesterday after in the cabinet briefing, the finance minister highlighted that they will be handing over 3 hotels of ITDC to the states. But not only that, let's also pull up the other counters. Taj GBK Hotels and Resort, that's trading with gains of almost 10%. And you've also got stocks like EIH Associated, that too has gained in today's session. You've got stocks like Viceroy too in the same space, which are seeing some sort of buying interest coming about in today's session. Mr. Rani, any favorites here? Do you like anything in the hotel space? We don't know if the occupancy rates are going up or what's brewing in this sector.
Honestly, no. I think I've tracked this sector for over 20-25 years that I've spent in the market, and I think these stocks they bloom once in 7-8 years. I'm also aware of the fact that quite a few popular, well-known names, respected names otherwise, have bought into some of these hotel stocks. I personally don't see any reason why one should be buying into hotel stocks because I don't see them making much of money. There are positive reasons, but the cost also keeps on going up. There is a very illiquid stock which I have liked, but it's very illiquid, so I wouldn't like to comment too much about it. It's the only stock possibly in Asia, the hotel stock, which has been debt-free from day one. It's debt-free, and it has never lost money, always made profits. That is a hotel called Sinclair's Hotels, which has got its property in Ooty, Darjeeling, and Kalimpong and other places in West Bengal. Rather illiquid stock, but at 300, 310, I think the stock is as good as possibly available at 50% to its intrinsic value. Never taken debt, never suffered a loss, consistently paid good dividends. Now you compare it to all the other hotel stocks which continue to possibly have a tap flowing with money continuously guzzling out. So there are expenses which they keep on incurring. So I am not a fan of hotel stocks as such.
But you like Sinclair's at 325?
Yeah, Sinclair's I like, and if anything close to the hotel stock, if I like, is Delta Corp, because it has also got its own hotel properties.
So do you like ITDC or tourism finance?
Honestly, I have not tracked too much about it.
Yeah, well, not surprised with some of those as well. About 3 o'clock, I think one key factor of the market that we need to focus on today is the currency. Well, we talked about all that's happened within the equity markets. I think once the clarification of the FinMin came in about the so-called stimulus, the currency and the equity markets both bounced back. But clearly, Pradeep, there is more to this rupee story today than what happened on the domestic factors. The international factor is probably as important or more so.
Several stories really. So like what we talked about, the stimulus package and the clarification came. If you look at the intraday chart, currency did recover, but then again, if you look at it for last 15-20 minutes or so, we have been trading very close to the day's low, which means the recovery didn't really last. Now, what is the reason? Maybe the overarching, the reason for the supply that we see not only in rupee but in all the Asian currencies or all the non-dollar, all the currencies against dollar, the fall that we have seen is because of Fed. So that reason is probably kind of dominating. And as long as you are bullish on dollar, you'll keep selling other currencies. So this is what exactly people are doing. But we must look at the kind of relative performance that rupee has seen. Rupee is the worst performing currency in Asia today. So we have come under a tremendous pressure. There could be several reasons. There could be one reason, what you mentioned, that government is working on a stimulus, and if the stimulus is announced over the next few weeks, which is kind of speculation, although government has clarified that it's a matter of probably months, and the stimulus may actually come probably in next year's budget and not really now, not immediately. But if a stimulus comes, it means we have to kind of compromise on the deficit targets. So we'll not move ahead towards 3, but we'll maintain the 3.2, 3.3 as fiscal deficit to GDP ratio, or we'll probably let it slip for a while, for a year or two, because we should also remember that the next to next year is actually going to be the election year. So there could be so many reasons for government to kind of compromise in short term, and there is no inflation fear anywhere. So there could be several reasons, but rupee is definitely facing a kind of reversal risk now, I would say, because rupee has been appreciating for a while. 64, 63, 50 is kind of a range that traders have been watching. We have been in this range for a while. We tried to move above this range. It didn't happen. RBI has been buying at this particular range. And now if there is a final reversal, will it go down? What is the kind of new range? So for a few days, I think it's going to be very difficult for traders to really take a position on rupee.
Yeah, it's interesting. Really, a lot of people classify a rupee movement and then translate it into what would be happening to IT companies and select other exporters as well. Today is anything but a clear one-to-one correlation. We've had a couple of other IT companies in the green. HCL Tech and a few others are trading in the red as well. So it's not as clean and clear, at least in terms of a trade, as it would seem. So look at this. The currency is depreciated big time. HCL Tech is down about 2.5%. A couple of others seem to be doing okay though. And remember, mid-cap IT was fairly active in trade yesterday as well. Sarvendra, track any of the mid-cap IT names? There was NIT Technologies that was active yesterday. Hinduja Global had some flavor. And today, too, couple of large-cap IT names are in the green. Any trades here?
IT definitely I have on the small cap I have a view. I would like to add on the rupee discussion that we are doing, just because I was looking at those charts. See, the fall from around 69 till 63 that we got was a decent one-sided kind of a fall, which we had a gap area between 66.50 and 66.20 thereabouts on the rupee. So I think this pullback probably will last you till 64.80, 65.30 max. So which means this weakening would probably halt at that levels, and my sense is that from the 38% levels, which is around 65.40, 65.50 on the spot, I think rupee will probably start on the leg of strengthening. So my sense would still remain that this is just a pullback to the decline that we had on the prices, not on the rupee. It was strengthening, and in that strengthening, there's a small pullback, which will be a 38-50% kind of affair, and then probably the next leg down on prices would start. So my sense would be that I would say 9 to 12 month target for rupee would be in the region of around 58 to 60, and this is the view that we've been maintaining for quite some time. and the gap area, which is around 66.50, should be a stop loss for this view. So sell this bounce towards 65.30, keep a stop above 65.50, and keep those shorts going into the system. So that is what I would recommend on the rupee. And coming back to our stock-specific discussions on the IT space, I think NIT is something that is definitely moving, and it's moved. But I would like to recommend a stock here, I think, where the long-term structures are looking positive, and that one is Tech Mahindra. I think clearly the worst probably seems over for the stock at around 400, 420 odd levels. And now, with the way it is moving, I think this stock has the potential to be a 550, a 560 kind of a story in the next 6 to 9 months. And that should be a decent return for investors. And going forward, I think even the large cap names can probably perform. I think the worst probably on the NSE IT index, if I have to put it as a benchmark, is probably over at 9300, and that is what we have been maintaining on other shows as well when we had interactions earlier as well. And 93, as long as it's been held on Nifty IT, I think the worst probably is over for that sector. And next 12 to 24 months, I think it should definitely be a performer, if not an outperformer.
Okay. Let's look at some of the other movers in trade. I must say Arcom has had a fairly decent move today, about 5.5% higher, so that is one. It's an all pharma list otherwise. Kalpataru Power, not a bad day at all, so that one is up. And Coromandel International is up about 3.5% as well in the session today. So those are 3 or 4 names that seem to be doing okay in trade.
Just to add a little bit on, sorry, Niraj, to interrupt. Just to add a little bit on Reliance Communication, yesterday's exchange data indicated that the total open interest in the futures and options segment was almost 92%. So today's build-up in the stock, I've seen there is some sort of long build-up on the future side. The option size has also seen some sort of open interest addition. It could be one of the contender to go into the F&O ban. That we'll only verify once the market closes and we get the data. But as of yesterday, 92% was the limit, and as per rules, it's 95%. Once it breaches that, the stock goes into the F&O ban.
Do watch out. This is not any kind of confirmation or a prediction, but there's a possibility that something like this could happen. But the reason I brought up this one, Navneet, was to ask Mehrbun Irani about some of these beaten down names. And Mehrbun, really, I'm not talking about Arcom per se, but as I see your thoughts, you're buying into beaten down names. HFCL, which is still okay, it's moved up, but GMR Infra, JP Associates, why these names? Fundamental reasons?
There is always a feeling, and people like you, I think, who are possibly looking at things on a very big level. I would say that you would say that why are you trying to identify stocks of this genre? Because ultimately these are earthworms which come out of the ground when the ground becomes marshy, typical victims of a bull market. I always put 5% of my clients' money in companies which are having a very bad balance sheet, but which can somewhere turn the corner. And there are more than 1,000, 2,000 companies today listed on the market, which you would honestly not like to touch fundamentally. I try to identify 3 or 4 of them and buy 5% of my clients' money. And if this stocks give me the returns full stop, I keep my money at 5% of the NAV. And that is the most difficult part. I would say the 3 companies which I feel can actually turn the corner. One is Himachal Futuristic, second is GMR Infra, and third is JP Associates. GMR Infra, we could possibly ultimately 2 years, 3 years down the line, we could have a demerger of the complete airport business. That is my call. I could go wrong. Second is JP Associates. Despite all the problems, the promoter is showing a clear intent of trying to take care of his problems. And that is where the market gave it a thumbs up, moved from 8 rupees, 10 rupees to maybe 30 odd rupees back to 18 rupees. And third is Himachal Futuristic. I am completely sold off on the digital technology idea. The Prime Minister goes on talking about it. I like companies like Sterlite Technologies and India Telelink for that. And third is Himachal Futuristic, a company which has started showing profits. You are right. Company where the promoter is putting in money, company which is expanding its capacity as far as optic fiber goes. And optic fiber is the business to be in at this moment, and according to me should continue to rule for the next 1-2 years.
Why not Sterlite Tech?
Sterlite definitely, yes.
Between the two?
Sterlite is fundamentally great, yeah. Sterlite is a top quality stock.
Then why are you
can't compare the two.
Why are you going for a company which is not as good as
5% of my money, I buy into 3 stocks of the 1,000 odd companies. That is the first difficult job. The second difficult job is when Himachal has moved from 12 to 30. Should I take some money off? And it's not very easy because normally the investors who are possibly watching us right now, they love to buy into the stocks, make their money, but they never know when to book the profits. So the point is, if out of 100 rupees, I put 5 rupees in the stocks, and if this 5 rupees becomes 10 rupees, and my 100 has become 105, I should bring this 10 down to maybe somewhere around 6, 7, because that is the catch. Because ultimately, one fund, you will have only this type of stocks in your portfolio which are performing today. But if something goes wrong tomorrow, you could be in serious trouble. So 5 rupees is fine. You can always take care of that 5 rupees with the balance 95 rupees you have. So I love trying to identify this type of stocks. It's very difficult. And then I try to put a cap, not more than 5%, means not more than 5%.
You've been tracking India Bulls Group as such, Mehboob. If you look at India Bulls Real or India Bulls Ventures, these stocks have been on fire, and now India Bulls Real is actually moving out of FNO because of the technical reasons. Any views?
Honestly, not tracking them much so closely, but yes, India Bulls and even the Future Group, which I have tried to understand. Both these groups, all the stocks in the groups have virtually been too much in favor. They have moved up very high. People are still gung-ho about it. India Bulls at this level, at which the prices are. India Bulls Ventures, I'm continuing to read. A lot of people are turning more and more positive, but I don't have too many things to comment on it. Future Group, I still feel there is some more steam left in this rally. Though with a clear disclosure, bought it young, and I've exited from most of the stocks in the Future Group also at the moment, while not rolling out for the rise. But I think people are right now chasing momentum without being able to identify as to why the stocks are enjoying this kind of valuations.
Well, that makes a lot of people, Mehboob. But okay, we've spoken a lot about the domestic markets. Our next guest analyzes Asian equities from very close quarters. James Sullivan, Head of Equity Research Asia, joins us on the show on the sidelines of the JP Morgan Summit from New Delhi, and Yatin Johnson to take the conversation forward.
Thanks for that, Niraj and James. This is Yatin from the BloombergQuint's Mumbai newsroom. And starting with the strategy, we have seen global equities outperform, and as asset class equities have done well. But in terms of emerging market equities, especially India, do you think currently the valuations look stretched? And if not, then what is your strategy and approach to emerging market equities?
So we're overweight equities globally, and it ultimately all comes down to growth expectations. The global economy outperformed relative to expectations by 50 basis points in the first half of this year. Second quarter global GDP growth was 3.8%, which is the highest level that we've seen since 2010, which provides a very supportive backdrop for overall equity markets as we start to see earnings growth come through. So we're overweight global equities. Within that, we also carry a significant overweight emerging market equities position. We're seeing very good valuation support. 60% of stocks across global emerging markets are significantly cheaper than their U.S. comparisons. The majority of sectors across global EM also offer good value relative to the U.S. market. And we are seeing a positive growth differential in terms of emerging market EPS growth relative to developed market EPS growth. You add to that the fact that the conditions, in our impressions, are ripe for a continued weakness in the U.S. dollar, and it creates an almost ideal environment for emerging market equity outperformance.
James, talking about the short-term, impact, because in India we have seen a lot of reforms, GST, RERA, and a lot of changes which has happened in the last few quarters. But do you think from here on there could be some slowdown, and probably in FY18 and FY19 we could see some earnings cut? And what is the view as far as Indian equities are concerned in the shorter term?
It's a great question, and I would answer it in two different ways. Number one, it's valuations relative to what? And as we've just said, 60% of emerging market stocks are offering value relative to their U.S. peers, and so we do see very good relative value across the emerging markets. An additional concern is the directionality of earnings revisions. And we're still seeing very strong global positive earnings revisions across emerging markets. Here in India, we see good long-term prospects. From a short-term perspective, we are seeing the one-off impact of the GST and HRA impacting growth expectations for this year. So for fiscal year 2018, we've seen growth forecasts revised down from 18 to 14%. On JP Morgan numbers, we think that growth will be further revised down to something between 8 and 10%, which leaves us neutral to the Indian market from a short-term perspective. That growth then does rebound back to 15% in the following year. And so the longer-term story here, I think, is very attractive. On a short-term basis, we're calling for a period of consolidation.
And James, one final question from my side. If you could tell us, in terms of sectors, which are the ones you are underweight on, and specifically if you could share your views on financials and pharmaceuticals, which have been seeing some bit of rebound, whether or not both financials and pharma, have you changed the stance?
Sure. So we're neutral to the Indian market overall, but again, that's more of a timing conversation than a longer-term view. From a longer-term perspective, we still remain very constructive on the Indian economy and the Indian market as a whole. From a sector perspective, our biggest overweight position is in the financial space. We're currently running underweight positions in both healthcare as well as telecoms, as well as some of the sub-elements within the consumer space. We are seeing some weakness, particularly in rural consumption at this stage. So financials really stands out for us within the Indian market.
Taking out the time and speaking to BloombergQuint, and that was the JP Morgan view from their India conference in Delhi. With that, it's back to Niraj in the studios.
Thanks a lot for that, Yatin. From one special guest to another, joining us is Ajay Srivastava, Managing Director at Dimensions Consulting, joins us from Delhi. Ajay, great having you. Thanks so much for joining us as we launch the channel today. The question mark is...
Thank you so much.
No, thank you for being with us today.
Congratulations to you.
Thank you. Thank you. Thanks so much for that, Ajay. What's your sense, Ajay? There's some murmurs about how overvalued the market is. The JP Morgan summit, almost everyone said that they've taken the step back on their allocation on Indian equities. What are you telling clients to do? Or where are you investing your money, more importantly?
See, okay. See, theoretically, for all fund managers whose bread and butter comes from more money coming in, you cannot ever say that it's a bad time to invest in the market. So that's a caveat on which we work upon. So that we keep shifting the goal, saying you'll make a return in 1 year, and now we say we're going to make a return in 3 years. So that's the perspective. I think the two themes running right now in the economy. One is, of course, we all believe that the market is overvalued by and large. I don't think that's an argument on the table. I think the key issue is the decoupling of company valuations versus the economy. I think that decoupling is happening in the market in the last 6 months, has accelerated in the last 2 months, and has reached a crescendo in the last 1 month, where the economy has been in the lowest ever, the stock market at the highest ever. The question you have to ask is your portfolio going to benefit from this decoupling, or is it going to be a victim of the decoupling? Because some companies truly will gain from the decoupling, because like we discussed in consumer space, the market developments which are changing, which are removing the unorganized sector, the small sector, the MSME sector, with all its other consequences. I'm not socialist to say, yeah, or economist to say, yes, employment will go down because the sectors will shut down and lots of people, businesses will shut down. But the corollary of the fact is that the flip side is that the bigger companies in the sector, whether it is footwear, whether it is textiles, whether it is leather, whether it is food products, those companies are going to gain inordinately in the new market structure. So for those companies, the decoupling makes sense. If you look at the small and medium sector, the decoupling is going to be ruinous, because if the economy growth goes down, they have nowhere to hide. So I think you need to look at a portfolio and say, which side am I on? And that is where the whole euphoria on the small and mid caps is going to start hurting or benefiting people. Because if your company falls in the first bucket, you will gain. If it falls in the second bucket, you are looking for disappointment. Clearly, the irrational exuberance is there in the market, but you got to pick and choose. Some could be winners of the exuberance because market structure is changing, and changing in a dramatic way.
All right, Ajay, point taken. There is irrational exuberance in the Indian markets, but what to do? DIs are still investing. What is the reading that you're getting with regard to the domestic institutions who continue to pump in money into our markets, where Nifty is trading at 22 to 23 times and FIs are going on selling? In fact, in the last month itself, we've seen one of the biggest sell figures coming from the FIs.
See, that's why I said FIs have a choice. Indians, by and large, don't invest abroad, so they don't have a choice to invest anywhere. So they have no choice but to come to India and be in India and invest in India. Now, that's what's happening to the economy. Each and every business, the money flow is humongous. In fact, we are telling people not to invest, but this still keeps pouring in. So we put in the debt fund, we put away in the debt securities, etc. The conundrum is that businessmen have started putting money in the equity market, whether through mutual fund, PMS directly, rather than putting in the businesses, which is showing up in the GDP number, which is showing up in the gross capital formation number. Now, how long can this decoupling take place? As I said, we don't know the answer. But the answer is, it is now taking a very severe form, where no amount of economic enterprise is being looked upon by people to grow into, or to build upon, or to invest in. whatever we are seeing so far is either companies which are getting PE funding and equity, and which case money comes from abroad and they set up a new venture or they sell it off, or the second lot is the whole segment of trading community, the business community, is taking off cash flows from the businesses and putting into equity markets at this point of time. And the good part, I think it's a good part, is that this equity culture is going up. Lots of new paper is hitting the market. Lots of new sectors are coming. Insurance is the biggest one coming to the market. So to that extent, new themes are building into the market. So I think it's going to go on for a fairly little longer time, because the new paper coming in offers new themes to the market. It's not like the old paper coming in and recirculating. So the whole host of insurance companies are there, the NBFCs are there. Now you see various, matrimony.com hits there, a securities company hits you, Cochin Shipyard comes in. So, it's a variety of companies being offered in the market, which gives you a lot of scope to build your portfolio, because you didn't have those companies in the first place. So that's what is giving the fill up. And I think the more the economy slows down, and that's the worst part, more the people will have propensity not to reinvest in the business and bring it back to the equity market. So it's like a self-fulfilling prophecy at this point of time.
Ajay, before you came in, we were talking to the JP Morgan analyst, and his view was that while they have cut down on the earnings expectation for the current year, for next year, they continue to remain positive at around 15% or higher. Now, that is the case with most houses, if you look at. Is the analyst community realistic enough while they are estimating next year's earnings? Because this has been a story for a few years now. In the beginning of the year, you say 15 to 20%. By the end, we come to, single digit.
I started, but you're right, absolutely. Last 3 years is the same story. We say the next year is going to be a better year. Next year growth falls. We said now it's the recovery. We say, as I said, people whom you are interviewing, including people I'm sitting here, have a vested interest to offer a future to investors. Otherwise, why would people come to you to invest? Because if I don't give them hope of a return which is going to come, which is satisfactory, they won't come in. And we will try our level best to find spots, arbitrage, opportunities, value plays, good plays, decoupling plays, etc., to try to give a return to our customers. But that's inherent in the nature of the industry. I need to be optimistic to invest, and which is why I hope that the package which might come from the government, which could give you some fiscal relief, or something would happen, or the demand will turn around, and this is going to happen. We saw what happened to the steel industry. The government protection changed the fortune of the industry, giving phenomenal returns to all of us as shareholders of these companies. So, that's what I said. Stock market is essentially in India, by and large, India is decoupled from the economy, because in the US, 70% of the companies beat the target estimates for the earning, and therefore the market is at a high. In our case, 70% of the companies beat the estimate on the lower side, and we are also at a high. So by nature of this whole argument that we are saying is that we have decoupled ourselves from the economy, and the companies we invest in stock market will possibly gain from the mayhem which is happening below the surface, not represented in the stock market. So I think both will coexist as a concept at the same time. It's not necessary that stock market need to go down along with the economy, given the way Indian stock market structure is.
Great. Ajay, thanks so much for joining in today and giving us that perspective. Really good having you.
Thank you very much. Congratulations to you once again.
Thanks so much, Ajay. Thanks so much. Okay, 10 minutes to go before market shut. Before we get in final thoughts from Mr. Mehboob Irani as well. Top closing strategies from our two technical experts. Very quickly, your top closing call, Srikanth.
I think, I would like to go with some defensive bets like ITC, which is trading around some 270 kind of levels. Here, I think the way the stock has reversed from its lows with a stop loss at 265, certainly we can take long positions, and we can keep a target of close to 278, 280 on the high side.
Okay, ITC it is from Srikanth Chauhan's hand. That is his top call as a BTST for the day today. So this is ITC from his end. Sarvendra, very quickly, your top call.
I would go with a Nifty strategy if I can, if I'm given a choice. So I would say that I would want to buy a 10,100 put on the Nifty current month, which is around, which would be around 38 odd rupees, and I will also buy a 10,200 call. So I would buy a strangle, a long strangle. And why I'm making this strategy is for the very fact that September month itself on the Nifty or for the indices have been at least a 4-5 month kind of a trending month. So we have been missing that trend till now in this month, and my sense is that there's a possibility to catch up, and there could be a 3 to 4% movement going into the expiry week. So if you make this long strangle, I think there's definitely a chance to double the premium, if not more.
So that's the closing strategy for now, and few minutes to go for trading to end now, and we are joined by Yatin Mota and Darshan Mehta. They are here to tell us what the dealing rooms are recommending today. Yatin, to you first.
Thanks, Pradeep. And the first stock to watch out for will be Lupin, and that pharma stock is on a tear. And clearly, at this point in time, the talk is that the FI selling, which was there in the counter, probably has subsided, and from here on, there could be a small amount of bounce that we could see at. So dealers are recommending buying Lupin at current level, almost 3% up for that stock. Also, ICICI Bank, that is one stock which is quite soft, and domestic funds are said to be sellers here. And clearly, the private banks are almost underperforming in trade today. So ICICI Bank dealers recommend STBT here. And finally, watch out for A to Z infrastructure engineers, and that is one stock which has gained almost 16.5%. The stock exchange information reveals that the CDR scheme with the bankers is currently that the company is working with, and probably if approved there could be some significant debt restructuring which could happen, and on the back of that the stock is up almost 16.5%, and dealers are expecting further upside from current levels. Darshan?
Okay, one of the counters which has been spoken about is Oricon. The counter is up almost 6%. The demerger buzz again seems to be hitting some of the dealing rooms. As far as the entire land play is concerned, the counter is up 6%. So this is something that is being spoken about. Now everyone's wondering what's happening with Ipca Labs. It's up 16%. The buzz that we're getting is that the company may bag a WHO tender very, very soon. Last year it was banned, but given the fact that people are not speaking anything about, there are some news of inspection of FDA with some of their facilities. That is something that we've not heard. But if they back this tender, it will be a high margin business for them compared to the current margins that they are doing. And finally, M&M Financial has managed to inch back from the lows of the day. One large domestic mutual fund is actively accumulating. They're not very, very aggressive, but at lower levels they seem to be accumulating, M&M Financial. So that is something that is being spoken about.
All right, Darshan and Yatin, thanks very much for joining us and taking us through what's happening in the dealing room. But let's also take a look at some of the cues to watch out in tomorrow's trade, and to take us through the same, Saloni Dhanuka from our research team joins us. Hi, Saloni.
Hi Navneet. So for tomorrow, we'll be keeping an eye on a bunch of annual general meetings. To name a few, BHEL, Sun TV, Grasim, Jindal Steel and Power, Schneider Electric, HEG, Suzlon, NMDC and a few others. Some stock reaction could be seen there. On the economic data front, Reserve Bank of India will release weekly foreign exchange reserves data. Remember that it touched a record high and crossed the $400 billion mark last week. On the global front, Eurozone and US is to release monthly manufacturing and services PMI data, which is an indicator of economic health. An indicator above 50 indicates expansion, while below 50 indicates contraction. And lastly, we'll be looking out for commentary by European Central Bank President Mario Draghi, as well as Britain's Prime Minister Theresa May. It will remain a key watch for global currencies overall.
Saloni, thanks a lot for joining us and taking us through all those cues. Well, it looks like a negative closing for the markets today, and let's go across to Niraj to find out how finally the closing today will pan out. Niraj.
Well, let's wrap up the markets, and it's turning out to be a flattish day of trade, which is actually not too bad, because midway through trade we slipped about 0.5% or slightly over that. So the Nifty shutting shop at about 10,120. The Sensex just about 15 odd points off. The Bank Nifty though, the weekly expiry as Navneet was saying, and that one down about 160 odd points. So just nudging the lower end of the range that we were speaking about at the start of the trading day today, 24,800. The broader end of the spectrum, about 0.5% apiece if I'm not wrong, for the mid caps and the small caps. So that's how the damage has been on the BSE mid cap, the BSE small cap, and a few others. But let's just pull up what the individual index movers have done in the session today, and that is the key thing that we watch out for. So it's been all pharma, quite frankly. If you look at what Dr. Reddy's has done, 7.5%, Lupin about 3%, and Cipla about 2.5%. So it's been pharma which has been the big contributor to the trading day today. Sun Pharma about 2.5% as well, and then followed by TCS. To an extent, heavyweights include HDFC and Bharti Airtel, which is up about 1%. But that's the small cluster of gainers which have done very, very well. Losers include some auto names, so the likes of M&M and Tata Motors, some minor losses there. There are some losses to IT names. So for example, Wipro and a few others have also gone down. Infosys is marginally in the red. But the big losers include the Tata Motors DVR, which is down about 2.5%, and a couple of banking names at the bottom of the heap. So the likes of Axis Bank as well as ICICI Bank are the top two losers. Couple that up with ONGC, and that actually sums up what the heavyweights which are dragging the markets in the afternoon session are. Pradeep?
Yeah, let's look at some of the stocks in mid-cap and small-cap space. ITI was no doubt the star of the day, and we talked about the stock earlier during the show as well. We spoke to the management also. 7,000 crore rupees, such a huge order for a stock like ITI, and this is what it would do really, although management has clarified to us in that conversation earlier in this show that their share could be somewhere around 2,500 to 3,000 crore rupees. You're also watching Delta Corp, RCom, GOCL. These are some of the stocks that moved up with good volume in today's trade. Some very interesting stocks that we have picked up. And also we have ITDC. Now look at this stock carefully, because yesterday this stock started moving up really when we heard from the finance minister that company is planning to disinvest 3 of the properties. Now one deal is probably finalized, but the way stock really opened this morning, there was some supply, significant supply actually at this counter. So we'll watch out for any follow-up trade at this counter tomorrow. And then we had India Bulls Group, 2 stocks specific. If you look at India Bulls Real and India Bulls Venture, both these stocks have been performing well for a while now, for a few weeks or months rather. But today, both of them came under pressure, and we didn't see any significant recovery at both these counters. So these are some of the stocks that we have been watching through the day. Navneet?
Well, Pradeep, the closing was not that bad as one was looking at. If you look at the morning session where Nifty actually corrected to those levels of 10,060, but this is the Nifty contribution chart there on your screen. There were a couple of counters which kept the Nifty going today. So the likes of HDFC and the pharma space, which was pretty active. Dr. Reddy's contributed nearly 6 points, and from the IT pack you had TCS, Sun Pharma. These were your top contributors for the day, but dragging the Nifty lower was ICICI Bank, HDFC Bank and ITC and Axis Bank. These were the top draggers on Nifty in today's trading session. But overall, if you look at the market breadth, towards the end, it was in favor of the declines. However, intraday, we did see some sort of improvement coming about. We opened in the green there with regard to advances, but towards the end, improvement was seen. But yet, the advance decline ratio was almost 1:2, clearly in favor of the declines. Let's look at a couple of stocks then, which were buzzing. Well, Pradeep's already spoken about ITDC, but the entire hotel space was buzzing. So the likes of Taj, GVK, Viceroy Hotels, ITC, all these 3 counters were up today. And not only these, EIH Associated was the other counter which rallied in today's session. In terms of sectoral loser, the media stocks were pretty weak as the media index was down nearly 1.5%. So you had the likes of Eros, Z Media. Towards the end, actually some sort of recovery seen in this counter. It actually ended in the green, and PVR down about nearly 2.2%. The realty pack was too under pressure. Some sort of profit booking was seen. So the likes of India Bulls Real Estate, DLF, HTIL, all these counters saw some selling pressure, especially India Bulls Real Estate, which is also in the F&O ban. Over to you guys.
Thanks for that, Navneet. Let's just get in final thoughts from all our experts. Mr. Irani, before we let you go. What to do in a scenario like this? Take some money off the table?
Honestly, no, I think. See, the point is the US dollar index, go back 7-8 months, 104, 105. We were all worried markets were not doing well. From there, it came down a long way. Now, dollar index is rebounding because it was oversold. Answer is yes. Bond yields at the low at which they are in the US. Now, all that augured well for the market, and money went on coming into the markets. Now, the point is, what has happened yesterday as far as the US Fed goes, it is possible Trump will come up with aggressive tax measures, which he has been stating for quite some time. It can make the dollar rebound. Answer is yes, and that is exactly what is happening. Can some money go off? Distinctly possible. But is it going to change the overall picture? I personally don't think so. I think the dollar index can strengthen a little bit, but it's not going to strengthen too much for the overall texture of the market to change. So I think status quo will be maintained. The only thing which I am noticing is, apart from the geopolitical problem, I don't see too many reasons for complaining or stating that the markets are expensive. It's all humbug. The fact is, IT and pharma have been given negative returns and the markets have gone up. That is making a lot of people feel better. Because IT and pharma was supposed to be the defensive bets. I am not making money. Markets are going up. So I start saying market valuations are expensive. But the fact is, yes, I accept the markets are getting polarized. Is the financials, is the auto, is the cement sector, is the metal pack, which has suddenly come back to life and is taking the markets up. The concern, if any, for me is that with every rise, whenever the rise happens, lesser and lesser stocks are participating. The market breadth is not giving too much of comfort. Is the market getting tired? Is the market showing signs of exhaustion? Distinctly possible. But is that reason enough for me to say, okay, tell my clients, take your money off? I have still not reached that level. I still feel there is an opportunity to make money in the market. The only concern is that if you have 3-4 stocks, the HDFC Twins, the ITC, which I feel has bottomed out now, and maybe Reliance Industries, which has reasons for going up a little bit more, will take the indices up. I promise you 9 out of 10 investors will say my portfolio is not performing. So making money now and outperforming the frontline indices is not going to be easy, but it's certainly going to be possible.
Sarvendra, one last question actually. If you look at, earlier this week we were talking about a fresh breakout in Nifty, but we didn't see any follow-up. I think Nifty Bank is to be blamed for that because Nifty Bank is actually lagging behind. What's your take on that?
No, absolutely. I think you've pointed it right. And if you also look at the Nifty, see, we are saying that there has been a breakout, but it's just a number. We are still at 10,124 as of today's close, and we'll get a provisional close. But so my sense is that if you look at all the three indices, including the Nifty, Sensex and the Bank Nifty, all are sporting negative divergences on daily charts, which means even for the Nifty, which has made a new high, the momentum is waning and the momentum top is slightly lower than the top of 10,150 or 10,140 to be precise on the spot. So the momentum right now is at a much lower level. So there's clear divergence in Nifty, and the top which we had, a new top, is not getting confirmed. And for Sensex and the Bank Nifty, the top itself is not there. So Bank Nifty top was at 25,200. Right now we are at 25,100 on this recent swing high, closing 24,800 for the day. I would say that it is definitely not confirming to the Nifty. And if Nifty does 10,250 and the Bank Nifty still is underperforming and the Sensex itself is not putting a new top, I would definitely ring the caution bell. And I would say that looking at all the four indices now, I am definitely in a cautionary mode. What cautions me more is the...
20 seconds, Sarvendra. At the start of the show, you mentioned you'll go long on the Nifty.
Nifty is a 10,250 trade.
Okay,
the range is upwards.
Okay.
The caution is always
there.
On
all
yeah,
the indices.
I'm saying at the start of the show also I said that the other two indices are not confirming.
Sure.
So that is definitely a cause of concern. Nifty free float 100 mid cap is definitely a cause for concern for me. The way mid cap sold yesterday and the way the breadth has been for the last 2 days is definitely a cause of concern.
Sure.
And my sense is that you should not be looking into a big bang breakout yet. It's not confirmed. It's not confirmed.
Okay. Jaman, thank you so much, all of you, for joining us today and giving us those perspectives. Shrikant stays on, of course. Up next is What Did You Miss on BloombergQuint. Stay tuned.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Hello and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Niraj Shah and this show is called What Did You Miss?, where we get you up to speed with all that's happened in the markets today in case you missed them. First, the headlines. Indian markets recovered from the day's low to end just marginally lower as pharma stocks lead the rally. Moving in line with Asian peers, the rupee falls to 10-week lows after the Fed signals more rate hikes by the end of the year. Dr. Reddy's is the top gainer on the Nifty after brokerage upgrades and an EIR for its Srikakulam plant. And Reliance Home Finance will list on the bourses tomorrow after it was demerged from its parent company, Reliance Capital. And on the show today, we get you big corporate voices. L&T's AM Nayak is bullish on the defense sector. Anand Mahindra believes there is money to be made in India's nascent electric vehicle sector. And SBI's Arundhati Bhattacharya on the role of public sector lenders in financial inclusion. Also, we talk markets with Shrikant Chauhan of Kotak Securities. Well, let's take a look at what the markets are doing. Maybe just quickly bring up the large caps. Navneet and Pradeep will take you to the other end of the market as well. What happened in the large caps was a bout of recovery. Essentially, the index gave a bout of recovery and good moves by the pharma pack predominantly, which led to the markets doing what they are doing. So 19 points off for the Nifty. Mid caps, small caps, ho-hum really about 0.5% off. But look at what happened to individual names. This is what the Nifty Pharma has done, or bring up any of the individual Nifty Pharma names. Sun Pharma, Cipla, Lupin, Cadila. You bring up mid caps like Wokhard or any of the others. Across the board, we saw some buying within the pharma names, which was actually a pretty good thing. What didn't do well? A couple of heavyweights, including an HDFC, which corrected a bit, and that pulled the markets off slightly, or put a bit of a pressure on the index. So that one was slightly, actually it was doing well. The best contributor, was HDFC. But what didn't do well, and let's bring up the Nifty losers for you, and you'll see what I'm talking about. There was equal and opposite pressure that was levied by some of these names. HCL Tech was down, a couple of other stocks corrected in the session today, and therefore the index ending pretty flat.
But a big question today, Niraj, would be, the way market has been reading signals from Fed. Equity markets recovered, right? That's true. We kind of regained most of the losses. But if you look at the currency market, it didn't. And if you look at the US debt market, how they reacted, yesterday, even there we see kind of a trend towards hardening. So an important observation here would be that, the forex markets or the debt markets normally sense a direction, accurately, and there is not that much volatility. So the recovery in equity today can be relied on only if forex and debt markets, both in India and US, follow through. Otherwise, probably we'll have, so many questions.
Yeah, we will.
Well, multiple factors working for the markets, but I think an important thing was that you also had the volatility, which went up almost 4% in the morning session, but towards the end, India VIX was also that ended the day in the red. So that's one positive takeaway. And Nifty gyrated almost 100 points during the day, but we ended lower only by 20 points. So the template for the market remains unchanged. There is buying which comes every time on every dip. And going ahead, the important level which the market will be watching out on Nifty will be 10,200. That's the strike where maximum open interest is. And Shrikant, if I may ask, 10,200 is the strike which everyone's talking about. If Nifty can cross that level, do you think there can be a fresh breakout on the index?
Certainly it looks like, because the way the overall option segment is like indicating us, even if we go through with the 10,100 strike price in the morning, then it was close to some 20 lakhs shares added, open interest added at the beginning of the trade, and because of that only the pressure was like humongous when the market entered below the mark of 10,100. But again it recovered back because of some maybe strength in the Indian rupee and all. But overall formation of this option segment is indicating us that 10,100 is certainly going to act as a very crucial mark based on derivatives data, as well as technically also 10,180 is the mark above which Nifty clearly failed to trade and sustain for last 3 days. Today also there was gap up opening, but it clearly failed. So there is like a lot amount of caution, and that is why we are like maintaining our stance that till the market is about 10,040, it is fine. It will again try to re-challenge the levels of 10,200. But in case if it breaks 10,040, then certainly we are going to see some more weakness in the market.
But the kind of leadership, if you see in markets today, came from pharma. Now, pharma has been actually a laggard. So, and if you look at the leaders, on the other hand, you have NBFCs, private sector banks, you had real estate companies that have been moving up for several months now and have been kind of leading this rally. They were actually witnessing a lot of supplies. So, what is really happening? How would you really explain this?
Pradeep, this is also a cause of concern because whenever there is a end of rally kind of scenario, we always see activity or rally out of those stocks which are like lagging or the sectors which are lagging in this particular overall up move. But the positive part is that the currency actually weakened, and it was somewhere close to some 63.50, 63.60 levels. From there all the way, currently it is around 64.50, and while looking at the chart, I am of the view that it is going to weaken further more in the near term. So 66 is not ruled out in the near term, and maybe because of that, there is like additional buying which is going on in all technology as well as pharma stocks. In fact, if you go through with the pharma stocks, especially like DVs, then it's a classic bear trap kind of formation. So the stock was close to some 820, 830 levels. There, the stock was having a lot of hammering, but it recovered sharply. And today, I think whatever that we are seeing is completely a short covering kind of trend. But yes, all these stocks are moving, and that's the cause of concern. So even if this sector is like these sectors are doing well, and if the market able to cross 10,200, then certainly it will have a big boost for the market.
Keep in mind some other stocks, by the way, that did really well in trade. ITI was up about 20% after it received a large order. So that is one stock. SMS Pharma was up about 20% in trade, and I'm sure Yash will speak about that in moments from now. Hotel companies had a fabulous day. So Viceroy was up about 20-odd%. I saw a couple of others like ITDC also doing reasonably okay. And Om Metals and Infra, after noted investor Purunju Veliath bought into it, was up about 16% in the session. Not to forget all of the pharma names, Ipca Labs and the others, which had a fabulous outing as well. But the one that will be in focus tomorrow is Reliance Home Finance, the demerged home finance business of Reliance Capital, which will be listing on the bourses tomorrow. Reliance Capital, of course, will continue to hold 51% stake in the company. Shraddha is here with more details. Shraddha, what should one expect?
A quick look, Niraj, at the business aspects of Reliance Home Finance. If you see, a major chunk of the business comes from home loans, which is 35%, and loan against property and construction together contribute about 46% of the business, both high yield but perceived high risk segments. Now, if you look at some of the trends, especially on the growth front, if you look at the AUM growth numbers, you will see that the AUM at the end of Q1 FY18 stood at about 13,000 crores. Now, over the last 3 years, FY14 to FY17, the loan book grew at a CAGR of about 40%, and the management targets to reach a number of 50,000 crores versus a number of 11,000 crores at the end of FY17. If you look at the margin trends, they still remain significantly superior. They have a superior margin profile, at about 3.9%, and that is only next to Indiabulls and Repco Home. Now, talking about the financials as well, if you look at the FY17 net profit number, it has almost doubled from 87 crores in FY16 to 170 crores in FY17. You have the number over here. So, most importantly, what is the listing price that analysts are working with? Well, let's look at what ICICI Securities is saying. They have a price of 115 to 120. That's their target. You have Access Capital at 124, and Edelweiss has built in a price of 137 for Reliance Home Finance. Now, if the company lists at these values, it would mean a price to book value ratio of anywhere between 3 to 3.5 times for Reliance Capital, which is very well within the band of 2.5 to 5 times approximately that its peers trade at. So overall, 115 to 137 is the kind of pricing that we're looking at tomorrow, which would also imply a market capitalization of about 6,000 crores, Niraj.
All right, we'll be watching out for that tomorrow then. Thanks, Shraddha, for bringing all those details. Let's also listen in to the big corporate stalwarts, A.M. Nayak, Anand Mahindra and Arundhati Bhattacharya, speaking about the growth opportunities in their respective sectors.
About 7,000 to 8,000 crores.
So you hope to be able to treble this at this point in time?
It's not a question of triple. One tender you win, that tender is of 25,000 crores.
Okay.
Either you will win or you will become zero.
We've seen a change of ministers in the defense ministry now. Are you happy with the way things have proceeded in defense?
No, during the time there was no defense minister, obviously things have not gone as fast as it should, or possibly not moved much. But now that there is a defense minister appointed, and possibly she's going to catch up with a lot of things which have stagnated, I think there will, 2 tenders recently opened, we were not trying for it. But at least 2 opened, right? Then 2 more, third one is opening within next 1 week. And then there are LPDs, which are the carrier for helicopters, 4 of them. Now, these are the 2 which we are focusing on. If we win one,
and
we are okay.
What's the average size of each of these in terms of the size
Both
of the
are
tender?
20,000 crore each.
Currently, we're the only player in electric vehicles in India. And we've just been believers for a while, haven't been making any money, but now the tipping point seems to be reached. But one of the experiments we are very, very sort of interested in and optimistic about is in a city in India called Nagpur, where we are supplying the cars. The drivers have signed on to a ride-sharing company there called Ola, and the government has provided the charging station initially for this to begin. And it's working well, and if it works extensively, then we're going to replicate it. So that's an example of a government stepping in, actively participating. So more than trust, you need a public-private partnership to work, and it can happen. The second plane at which you want government help, and I really don't believe in subsidies at all, because I think these businesses are all profitable, as I said earlier, is you need the leader of the country to give a direction. And let me give you an example here again. When Prime Minister Modi laid out his vision for solar power and wanted to make India a leader in solar power, stated a very clear goal of 175 gigawatts of renewable energy by 2022, 100 of which were solar. We invested. So businessmen look for stability, they look for direction. You don't need that much more if you're just smelling opportunity. So in 3 years, we built a company that is now the second largest builder of solar power plants. We're not looking for subsidies. We were just saying, tell us if that's the track you're going to follow. If you're going to do that, there's money to be made.
It is impossible for organized industry to create this many jobs. And therefore, if we are to provide the right kind of opportunities for many of these people to come up to potential and in turn create jobs, then financial inclusion is the only way. Financial inclusion, as we see it today, is not only providing the entire range of banking services, but also ensuring that we provide opportunities for investment, insurance, and pension products to every single Indian, no matter how small or how remote.
And of course, stay tuned to BloombergQuint.com to catch more big voices from the Bloomberg Global Business Forum today. Bill Gates, Tim Cook, and others on Bloomberg Quint Live today. You can, of course, as I said, go to BloombergQuint.com to read about all the business forum and a lot more. Okay, guys, just before we move on to what daily rooms were saying in the session today, I thought the space which really caught everybody's attention was pharma. And I don't know, I mean, you could argue that some of these stocks are undervalued, but I was just speaking to Darshan before the show, and he simply said that, well, there's some good news coming in for Dr. Reddy's and a few others. And maybe the industries, or maybe people are now believing that there could be some resolution when it comes to pharma names by and large. And therefore, it's not just Reddy's which should go up, the others should go up as well. So it was a fairly heartening day of trade for some of the pharma names.
Well, clearly, it could be the valuation catch-up game because 1 or 2 stocks were going. Then you saw the entire space, Niraj, buzzing. It was very difficult to find non-pharma gainers today because the list was dominated by them. Even I was looking at the F&O gainers. Among the top 10, 8 were all pharma gainers, right from large cap to small cap or even the mid cap. So good news because the pharma space so far has been underperforming this year, as even Mr. Irani was mentioning. The IT and pharma space so far has not participated. So, stocks like Lupin, which were actually trading historically at those PE of 22, 23, have come down to 16, 17. I don't know if it's the valuation catch-up game.
Yeah.
And also it would be interesting to see, how much money is actually moving into pharma-focused funds, because pharma is very stock-specific game, and every stock has a different story.
Sure.
And not every investor can really, analyze it. So several people have been kind of putting money or recommending investors to put money into pharma funds, and when the funds come to buy, they'll be buying several
Before,
stocks.
I'm sorry to butt in, next time when you do your mutual fund show, I really want you to ask those fund managers whether it would be wise to put your money in any pharma dedicated funds now.
Point taken, ma'am. We'll do that. Okay, but our dealing rooms, that buoyant about the pharma space as well. Yatin, of course, speaks to dealers across and standing by with the details. Yatin, what are you hearing from your dealers about tomorrow's trade?
Niraj, it's all about pharmaceuticals and the kind of move that we have seen. Of course, you discussed that in detail, but talking about Lupin, Ipca, Glenmark, Sun Pharmaceuticals, all of these stocks, a lot of these pharma stocks today moved above that 50-day moving average. Some of them moved above that 100-day moving average. So if you look at it, it's not just today's price action, but historically the kind of counts people work on heavy price and volume action, we have seen that crucial 50 and 100-day moving averages crossed by most of these pharma companies, and that is significant. Of course, Ipca is one stock which gained 10% last week, a 16% move coming in for trade today as well. Lupin also one stock, 3% up in trade, and these are the two stocks wherein dealers are focusing their money on. Of course, Ipca, for the reason that there could be a global WHO order which they could have bagged, and the announcement could be there shortly. Of course, we are talking about the dealing room bus, and this is unconfirmed in terms of the reports. Of course, you need to consult your financial advisor before taking any decision. So these are the two pharma stocks wherein dealers are quite positive on. And finally, watch out for E2Z infrastructure. That is one stock wherein there is a talk that the CDR announcement, the restructuring with banks has been finally approved, and we could see some bit of clarity on that front. And if the debt really gets restructured, there could be a lot of interest cost saving for the company, and probably that is the reason why the stock ended 17% higher in trade today, and dealers are expecting a further 10 to 15% short-term up move as far as this mid-cap is concerned. Niraj.
Thanks, Yatin, for all the details. So 2 out of 3 stocks that Yatin talked about were also pharma. So heavy dose of pharmaceutical shares today. Shrikant, any one stock you'll choose?
I think, most of these stocks have rallied too much. I like Cadila Healthcare, which is currently trading around some 500 kind of levels, and if you go through with its overall price chart, then the stock has not battered down very badly when the overall pharma sector was down and stocks were down. So this one was the particularly we can say it's a little bit outperforming stock. And at this point of time, when all the stocks are performing, I'm of the view that it is again going to cross its previous high. Currently, it is around 503 levels. And while looking at the overall volume picture and the way the news flow is there in the past, I'm of the view that it is going to cross its 560, 570 kind of area. And then the next level to watch out for is something 630, 640 based on technicals. So it's a classic buy at these levels with a very low risk. Currently, it is around 500. With a final stop loss at 480, certainly we should look for adding this stock to our positional portfolio.
All right, so Shrikant is picking up Cadila in the pharma pack, but let's move on and see what are the key events and important cues to watch out from tomorrow's trading session. And to take us through the same, Saloni Dhanuka joins us now. Hi, Saloni.
Hi, Navneet. So for tomorrow, we'll be keeping an eye on a bunch of annual general meetings. To name a few, BHEL, Sun TV, Grasim, HEG, Schneider Electric, Suzlon, Delta Corp and a few others. Some stock reaction could be expected in those stocks. On the economic data front, the Reserve Bank of India will release weekly foreign exchange reserves data. And remember that it touched a record high and crossed the $400 billion mark last week. On the global front, Eurozone and US is to release monthly manufacturing and services PMI data, which is an indicator of economic health. A reading above 50 indicates expansion, while a reading below 50 indicates contraction. And lastly, we'll be looking out for the commentary by the European Central Bank President Mario Draghi as well as Britain's Prime Minister Theresa May. It will remain a key watch for all the global currency pair.
Thanks a lot, Saloni, for that. And let's have a look at the small cap stocks of the day. Yash Upadhyay joins us now to tell us more. Over to you, Yash.
Good afternoon, Pradeep. So today's small cap stock of the day is a pharma counter in the form of SMS Pharma. The stock was locked in an upper circuit of 20% with volumes too coming in substantially higher at over 18 times its 20-day average after the company announced its plans of entering into a joint venture with Switzerland-based Chemo SA. Now, the company is engaged in the manufacturing and sale of active pharmaceutical ingredients, or APIs as they are widely known. Taking a look at the financials, you can see that the revenues of the company have grown by more than 19% at a compounded annual growth rate over the last 3 years, while EBITDA has grown by more than 35%, again compounded annually over the last 3 years. The debt of the company stands at around 176 crores, which translates into a fairly manageable debt to equity ratio of just 0.5 times. The promoters of the company hold close to 68% stake in the company, and almost 6% of it is pledged with lenders. However, as far as valuations are concerned, the stock trades at a price to earnings multiple of 22 times, which is significantly lower than the industry average of 48 times. Even at the current price, the stock trades at a price to book of just 2.7 times as compared to 7 times of Hester Biosciences and 4.3 times for RPG Life Sciences. Now, if you can pull up a 1-month chart, you can see that the stock has been in a rally of sorts and has managed to return close to 50% in that period. Over to you.
Well, thanks a lot for that, Yash. Shrikant, before we, I don't know if you've tracked SMS Pharma ever, but this notwithstanding, if people were looking to trade into specific stocks tomorrow morning, what are those 2 stocks that they can look forward to?
I think, they should look for adding those stocks which are like defensive. The earlier one that I mentioned is ITC, which is very close to its support area, and I think since last few days, when the market actually is not performing, it is into a specific range. In this type of market, we should look for adding such kind of stocks. So ITC is really looking good. Other stocks on which we can focus is Bajaj Finserv, which is currently around some 54-50 kind of levels, and it is currently very close to its support area. So here also the risk reward ratio is quite favorable, and if we see the market is again buzzing, moving up, then certainly this one is going to do well because the overall strength is there.
Okay. Before we wrap up, let's also head across to Jayesh Khilnani to take a quick check on how the commodity markets are behaving.
Good afternoon, Niraj. Commodity market not doing that well. Starting off with the oil prices, the WTI is trading with a negative bias of about 0.5%, but still holding above the $50 mark. And the good news is that Brent is also trading above the 56 mark. Moving on to gold prices, they have actually touched the $1,300 mark and hit a 3-week low. Now this is on the back of Fed indicating that it is on course to hike interest rates. So is the case with the base metal space. It has actually snapped a 4-day winning streak. All the base metals on the Shanghai Futures Exchange ended with a loss of about 1 to 2%, except aluminium, which gained about 1%. The other one that did not do really well was the iron ore futures on the Dalian Exchange. Last time I checked, it was down more than 5% on the SGX, that is the Singapore Exchange. So overall, not a good handover from the east to the west.
Okay, Jayesh, many thanks for joining us and giving us that perspective. Keep in mind the rest of the world is a quiet place as well. Europe was marginally in the green, Dow futures marginally in the red. So don't expect a big bang move or a big bang impact of what the global markets will do in tomorrow's session at least. But Shrikant, take a moment to thank you for joining us on an inaugural show of What Did You Miss? And on Countdown as well. Thanks for being a part of the show today.
Thank you, Niraj, and congratulations to all of you because it's a new venture, and I'm very much sure that you guys have very strong team and you can do well.
Thank you so much, Shrikant. Really appreciate that. But with that, it's a wrap on this edition of What Did You Miss? We have a whole lot more lined up for you on BloombergQuint, so stay tuned.